And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Friday to my futures family. It is time for the Market Prep, Friday, March the 3rd. My name is John Hoagland. Thank you for trusting me with your time. Maybe we'll get a little visit from Lacey here this morning. Looking forward to finishing up this week strong. Of course, that's going to take accurate context, good risk management, and always remaining patient in our trading. This morning's economic numbers, nothing due out just yet here at 8:45 Central. We've got the PMI composite final, 9 o'clock, the ISM services index, and then it's nothing but talking Feds for the rest of the day. On the schedule, approximately 11 a.m. Central, Logan is going to speak. 10:15, Bostic is going to speak. 2 o'clock, Bowman is scheduled to speak, and right around 3:15 or shortly thereafter, Barkin will be barkin'. So we've got a lot of talking Feds. Yesterday, I think they did a good job of helping us get our move to the upside started. We've got stock indexes ready to open higher after a pretty stiff technical reversal yesterday at the February low, and a couple of those talking Feds somewhat solidifying the idea that there will only be a 25 basis point rate hike in the March FOMC meeting, the 21st and the 22nd, a two-day meeting, a couple of weeks from now. 10-year rates have slipped a little bit overnight, but they're still remaining above 4% or right on it last I checked. Crude prices have stalled around $78, really kind of struggling above last week's high of 77.74. VIX this morning down back below 20 at 1955. Dollar index 104.72 off its high for the week, which was over 105. And the yield on the 10-year right on 4%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notified when we do go live. It is Friday. Always love Fridays. We always used to say in the trading pit, if you're still in the pit after noon on Friday, you're down money. So let's make some money today and call it an early day. What do you say? Always sounds like a good idea to me. Remember, some of these markets have been relatively directional, namely the 10-year. We could maybe see some profit taking at some point today. Only time will tell. Stay tuned to as the market turns. Come here, Lace. Want a treat? Want a treat? Let's get Lacey up here to say good morning. Come here. Come here. Come on. I have a treat for you. You don't want to come up? Come on. She's camera shy this morning. Here's your treat. Okay. Good girl. Good girl. Good girl. Maybe next time. All right. Good morning, everybody. We got Dan Trader first in the room winning the prize this morning. Always a pleasure to see you, Dan. Rooster, cock-a-doodle-doo, crowing already. Sean, good morning. Miami, or is that Miami? Brian, good morning. Terry King, Ainsley. Joe, good to see you. Possibly a open above range and regular trading hour value. Possibly a lot of shorts from 227 high. That very nervous. Also overnight holding towards the high. Directional day. We had a pretty good jump in open interest in the S&Ps off that low yesterday as well, Joe. John, good morning. I look for directional versus range day. I'm with you. We're going to be opening out of balance from yesterday, rejection yesterday, reversal pattern. I'm looking for some continuation to the upside, at least until proven wrong. Alfred, good morning. Jason, good morning. My brother Rick, Randolph, love you. JM, Nasdaq. Lacey's saying good morning too. She's right here, demanding to be pet, as we know she is the center of the universe. Good morning, Rusty Golfer. Will, good fortune today to you as well. Les, Ori, and my guy Vince, you're back. It's good to see you. Hope you had a nice trip. Cohen, Stephen, Sarah Hall, good morning. Prayers, love, and beer to you as well. George, Lacey, yes, the center of the universe. Dan, good morning. Andy, Shy, Haggle Matters, good morning. It's good to see you. Ainsley, Travis, good morning. Never work with children or animals, right? Yeah, they tend not to cooperate, I guess. Trading Research, good morning. Jason, Leslie, Jay. Jerry is awake. Hope John is too. Robert, good morning. Tal, and on jury duty today. That's always fun. I've only had to do that a couple of times, and I've never been picked for a jury. I don't know if I'm lucky or just lucky. But you have to sit there the whole day, and they give you that. It gives you a chance to get a little bit of reading done at the very least. All right, so we are ready to jump into things. I think we've got everything we're looking for here. And what else? Well, it's Friday, so this will be it. No coaching, no make home money, nothing like that. No reflection at the end of the day. So if I don't get the chance to talk to you later, I hope you have a very successful trading day, of course, and a wonderful weekend. Make sure you take some time to be good to yourself. We work very hard at this. We deserve to be good to ourselves and, of course, be kind to others and keep praying for peace. Take a look at the chart in the S&Ps. A very exciting day yesterday, and I think it's going to be providing some good opportunities for us for the coming days. I'm with Joe. I'm thinking, we've got a pretty stiff reversal pattern here yesterday. February's low was a big focus for everybody. We did look below it, but we rejected. Look at this. We opened lower. We traded lower. We traded higher and closed higher. Big reversal pattern here. Bullish engulfing pattern for sure, right? So what did we do yesterday? Well, we added 18,000 in open interest. We have excess and rejection below the February low. Volume was just okay in futures. It was pretty good on the New York Stock Exchange, just about 4.1 billion shares traded yesterday. We've got that open interest increase. This is indicating new buyers coming into the marketplace. Take a look at the 30-minute chart here. Okay. 2 days of really strong positive delta. Now, that's something that is a little bit confusing. I much prefer a delta divergence because it tells me that there's longer time frame traders involved in the market. But yet on, what was this? Wednesday, very positive delta. What was it? It was a positive 22,000. Yesterday, on a big up day, of course, we have 30,000 in positive delta. It tells me that this is probably more speculators than hedgers getting into this market in this direction. If the hedgers now start to get involved, we're going to see some pretty decent upside movement here. And I think that Joe, me, and probably a lot of others are looking for that. This is a pretty good reversal pattern. We've got excess below the February low. I'm loving that. So that indication of speculator longs doesn't mean that they're all short time frame pea shooters like me. There's a lot of big speculators out there, and I'm suspecting that there are a lot of the purchasing of the S&Ps and the NASDAQ that have occurred for the last couple of sessions. Now we're looking for the longer time frame to come in and continue this push to the upside. They very well may be pushed to do so. We have a late spike to the upside at the end of the day yesterday. Base of that late spike is settlement 39.8475. There's also the kind of the breakout point when the market really started to dig to the upside, which is all the way down here, 39.5475. It'll be a little bit more clear on the TPO chart, and then we can talk about some potential upside targets for this market. Okay. Here's yesterday. Here's our late spike. Looking like we're going to open with a gap and above the late spike. What are the late spike rules? Opening above the late spike is the highest probability of continued acceptance of higher pricing. Opening in the late spike is also possible acceptance of higher pricing, but a little bit lower probability. Opening below the late spike is rejection of higher pricing. The late spike is created when the market moves away from balance at the end of the day, leaving this tail, I guess you could call it. It's more of a spike than a tail because it doesn't bring price back into range, leaving this and not giving the market time to accept prices at those levels over time. We look to see how the market opens the next day, and obviously we're opening above the late spike, the highest probability of continuation of higher pricing. Always remember, anything can happen. Anything can and usually will happen. We've got talking Feds today. If they start saying something more hawkish, that may put a little bit of a kibosh to the happy mood that longs are enjoying right now. We don't know. What I'm seeing, I'm liking to the upside. So here's our base of the late spike, again, right at settlement, 39.8475. The base, the beginning of the late spike, the breakout point of balance, we're putting right here again. That's 39.5475. If we do get a pullback, this would be a kind of an interesting level for me. If we don't, we're going to be looking for this market to continue this move to the upside. The most reasonable point for a move to the upside, which is within reach today, is this poor high here. We have Dalton, we have a lot of profile traders looking at all these weak highs up here and looking at the move to the downside as probably shorter time frame traders. If we've got speculators now holding shorts in a longer time frame, they're going to be the ones that are going to light the fire to the upside. So our first target is this weak high up here at 40.34. Above that, we go up to 40.90. Above that, we come all the way up to here, which is 41.45. Pretty substantial move. We have the technical reversal pattern to do it. We may have traders too short in a way that could be entirely possible. Only time will tell. I can't guarantee anything. Nobody can. But if the market continues to move higher, these will be visible, logical levels for price to reach. We've got a couple of naked point of controls also along the way up. Those will also be important. As a matter of fact, we'll be focusing on those points of control in the NASDAQ because the NASDAQ does not have the same weak highs as the S&Ps diz, whatever it is. Yesterday we had a double distribution trend day with a late spike at the end of the day. Reversal pattern. Opening above that, we're looking for opportunities to buy weakness. If we can't close the gap, we're going to be looking for ideas for opportunities to buy weakness. When we look at this 30-minute chart, we do have some overnight inventory to the long side. inventory is continuing the push to the upside now. No, we got a little bit of a pullback here a little while ago, but the market is still continuing to try and push to the upside. It's going to be hard to buy the high here, but it may actually be the right thing to do. Shaw, just tell him you know if someone is guilty based on their demeanor, you'll be home by C period. There you go, Shaw. Right? Yep. All right. Let's take a look at crude oil. This should be a pretty quick talk here. Although, wow, we've got a pretty decent move here away from where we were. This is a change here, ladies and gentlemen. Yesterday, on low volume, we only added 200 in open interest. Inert open interest. Volume dropped on a indecisive day. Well, I think we've got our answer now. We're not going to be holding above last week's high. We got the market heading to the downside. Look at this. What is this move all about? What the heck came out? Oh, the United Arab Emirates is debating internally whether to leave OPEC. Wow, this is big news. This is big news. Oh my goodness, look at this move. Crazy. Well, new information in crude oil, ladies and gentlemen. That takes all my little notes here and throws them right out the window. We've got some visual targets down here with this point of control. Don't try and fight this move without some sort of daytime frame structure. Let's take a look at the TPO chart. I'm sure that the opening range is the high of the session. We've now created a gap. Naked point of controls down here. Another one down here. This is crazy. Don't fight this move. Don't fight this move. This is new information, ladies and gentlemen. Saudi Arabia and UAE clash over oil, and Yemen as a rift grows. A lot of tension, I'm thinking, over there. Wow, this is big. So I can't kind of suggest with this new information without some sort of reference what this thing is going to do. This is going to be an interesting day in crude oil. Let's take a look at the NASDAQ now. We'll go back and see how crude oil is doing. So the NASDAQ, same situation, plus we had the weekly kickoff low that was also rejected, just below February's low. Opened lower, looked lower, closed higher, reversal pattern, bullish engulfing pattern, adding 3,200 in open interest yesterday, new buyers coming in. It reads just like the S&Ps. Take a look at the 30. So here's our late spike. The base of the late spike in the NASDAQ is 12,058. That may be a history. The breakout point down here is 11,939. We're opening above the late spike, ladies and gentlemen. That's the highest probability of acceptance of higher pricing. We do have overnight inventory to the long side. And we're opening with a gap. And we're opening above a late spike. There's three nuances that say we're accepting higher pricing. What else can you say? What else can you do? You look for opportunities to buy the market when it exhibits some kind of weakness. Here's the TPO chart. Here's that weak high in the S&Ps. It's not a very strong high here in the NASDAQ. We have another weak high up here in the S&Ps, not necessarily in the NASDAQ. So my focus visually for targets on continuation to the upside is going to be more based on the naked points of control than any weak high that we may be seeing in the S&Ps. Double distribution trend day, IB low of the regular trading hour session. double distribution, late spike, opening above the late spike with a gap, higher probability of acceptance of higher pricing. Take a look at gold now. So gold is now continuing its move up. It looks like we just took a little bit of a day of rest yesterday in volume, but we did add 5,600 in open interest. That's the estimated increase. Last week's high going to be somewhat resistant. This moving average here is I call it the dancing bear 20 session exponential moving average. JD, John Doherty, our good friend here at Top Step, he suggested I put this on these charts, and some of them I have them on, and look where the high is. The market traded right to that 200 session exponential, 20 session exponential moving average. There's also confluence up there with last week's high and weekly kickoff high not too far above that. There's going to be some fish up here, ladies and gentlemen. What's the market done all week? It started here. It's now up here. Possibility for some potential for profit taking. Yeah, it's going to make it harder for it to get through these resistance areas that we're looking at. Here's the 30-minute chart. All right. Overnight inventory to the long side. Obviously. We still have some business to fix up here. We've got a couple of naked points of control up there. If we can't close the gap relatively early, I'm still looking at this market as relatively strong to the upside. We added 5,600 yesterday in open interest. We added the day before. Prices overall have been moving higher with value, points of control overall moving higher, not so much yesterday, a bit of a break day. Remember, we were looking at potential repair. Well, we didn't get to the repair to this point of control here. We got to this one yesterday, didn't get to this one. This inability to get down there is telling us that there may be an inherent strength in this market. We left excess on the profile. Take a look-see. So we have excess on the profile, not necessarily great excess on the high. Normal variation, neutral day, gapping higher. What was I going to say about that? We have an excess low and a low excess high, unable to close the gap there or to come down here and recheck the point of control, which would have been a completion of repair. Didn't make it. What doesn't happen is equally as important as what does. We see the market continuing this push to the upside today. Euro. Market's kind of falling back into balance here. We've got going to be looking at balance rules like our last week's low, this week's low, the lower extreme, this week's high, the upper extreme. We're right in the middle of it. I'm going to try and stay patient today. We did add 4,800 in open interest in the opposite direction here on the downside, a little bit low on the volume, but still, that's a pretty decent boost in open interest. The market opened yesterday with some considerable overnight inventory to the short side. It probably did a good job throughout the day in this small consolidation range to adjust that inventory. But now, again, we've got a little bit of a gap. No, it looks like we closed the gap, but yesterday's range high, supportive at least for now in the regular trading hour session. What is this market doing? It may go into repair. It could trade down to the point of control from yesterday and a point of control move up to this level because we are between them. There's no gap here, but we still have a gap from Wednesday to Thursday. We're in that gap. Repair is likely. Take a look at the TPO chart. Week low. Week high. In between points of control, we tend to trade to both. Very visual. Markets are extremely visual. So I'm going to try and stay patient. We're out of balance from yesterday, but overall we're falling into balance, and we've got some potential for for repair. I'm going to focus more on this point of control down here and this point of control up here if I'm going to be trading the euro at all. Some days there's just not that much to say about a particular market. Now look at, man, oh man, I said this morning when I looked at the 10-year, I said, this market is primed for a little bit of a profit-taking day, and it looks like we may be getting that as we speak. Yesterday, the volume was pretty good on the way down, not tremendous. We added 54,000 we lost 54,000 in open interest. That's telling me that's kind of a warning shot. I mean, this market has been moving steadily lower. We lost open interest on a new low. That says, all right, maybe this market is ready for a change. Maybe it's going to go into a downside digestion market state, maybe even a reversal for maybe a bear flag, something of that sort. I wish I had listened to myself because I would have had pretty good trade location by now. The potential for profit taking, I mentioned it on the open. It's here in the 10-year, and it seems as though it may be happening as we speak. Overnight inventory long. Overnight longs getting paid. Short covering. Profit taking. Just what I was expecting, and I didn't do anything about it. I hate it when that happens. Here's the TPO chart. Week low, week high. Opening. Tested to this point of control here. I'm looking for a lack of a gap close. I'm looking for this market to rotate higher, which leaves an island bottom. We had a couple of questions at some point this week. We had, what's an island bottom? Well, this is a perfect example of it. Price moving lower, gapping to a day session range, gapping away from a day session range. Pretty firm reversal pattern if that's going to be the case here. Now, with the rates probably continuing higher, I doubt that that's going to last for very long, but it gives us a pretty decent opportunity today. And we've got the natural gas. So, reversal pattern, bullish piercing pattern, continuation, acceptance above weekly kickoff high. We had three late spikes in a row, not yesterday. We lost 6,800 in open interest. I'm looking at that yesterday as some possible long liquidation, some profit taking that came into this market yesterday. Here's the 30. Even with that profit taking yesterday, value, points of control, they continue to push higher, even with that reversal yesterday and the fact that the market did close lower. It did close below the weekly kickoff high, but look where it is now. We've got some overnight longs in this market. We're in range. We're above value. If we did see some long liquidation, some profit taking yesterday, well, those traders may be looking to get back into this market as it continues to push to the upside today. Here's the TPO chart. A normal variation day, the IB high of the session. Normal variation, extreme day. Points of control are very low. Well, at least the TPO point of control. Long liquidation, B-shaped profile, supported by the loss in open interest. Well, that long liquidation actually takes selling power away from the market. We had it here as well. Long liquidation meets new buyers. We have the late spike, the late spike, the late spike. 3 days in a row with late spikes. And that's something. Excess lows, late spike highs, a pullback, losing open interests, taking selling power away from the marketplace. Be looking for this market to probably continue this move to the upside as long as we hold weekly kickoff level high here. So I'm really jazzed today. I'm happy that we're gonna see possibly some good upside movement here in the stocks and in the stock index futures. I'm as a longer term investment, I wish they would just keep going higher all the time. As a trader, sometimes you get some good downside moves to take advantage of, but I think we've got unless one of the talking Feds says something today to change the situation, I think we're looking at a pretty decent period here where we may see some good continuation of the upside. I hate to say that. I don't want to give anybody a bias. We're really just talking context here and not actual buying or selling of anything. It's just a thing, if you will. I mean, the nuances in the S&Ps, reversal pattern, late spike, above the late spike, the nuances are lined up to the upside. That's context. Where to get in, how to get in, that's up to you. And I hope that you do, and I hope that you have a great trading day. And if it whirls around and barrels to the downside, I hope you catch that. But, it's never easy, is it? Never easy. Greg, can you speak on the value area high from the overnight session in the ES? Yes, all time frames. The ES, overnight high value. Well, the way I'm seeing overnight value high in TPO, it takes us back into the into the late spike. If we return to the late spike, it's still telling me that the market is accepting higher pricing. Dude, halfway through step 2, nice job. So, if we get the opportunity to look at the overnight value high, I think that's a gap close. It may be supportive. We've got a couple of different areas to look for opportunities to buy weakness in this market today, even all the way down to here. So, the overnight value high is a gap close to the late spike, but doesn't change the implication with price at this level that it's accepting higher pricing. All right. All righty. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. If you feel yourself emotional, if you feel yourself angry, if you feel venom in your veins, you're no longer centered, and you're not going to make anything beautiful out of your ball of clay. Make sure your ball of clay is centered. Make sure you're centered. You can make something beautiful in that case. Have a great weekend. Have a great trading day today, of course. Have a wonderful weekend. Thank you all again for joining me and Lacey. Here at Top Step, we are focusing on your success, and we're always looking for ways to find to improve on that. Let us know. You can tell me, Jay Hoagland at topstep.com, JHOAGLAND at topstep.com. Blessings. Make sure you say a prayer for peace. Be kind to yourself, be kind to others, and I will see you Monday morning. Have a wonderful weekend. We'll see you then.